Afternoon, how are we all doing? Is everybody? Afternoon, JC. Afternoon, Steve, Crom, Virginia, Amy, Monkey, how are we doing? So, big news on the pound. We actually went for the 0.5%. Big move. Well, big move from the bank, not so much big move from the market, but we'll see. Day's not over yet. Afternoon, Fletch. So just an update on the DAX this morning. So we looked at this move down and potential gap fill. It's still in play if you're on it. We had a little bit of a pullback to the open, and then they rallied back from the open, new high. So market structure is bullish. Looking for that gap fill, which is 150 ADR to the upside. Not sure it's going to make it, but we'll see. So that's still in play if you're on it. Afternoon, Amar, Daresh. How are we doing? Euro US dollar is a breakout. I'm short Euro US dollar. So that's an H1 M5 entry from, got into that yesterday. So looking for that push back down into propulsion, double bottom there. That's the area I would be interested in, looking for buys. See where that gets to. Right, let's have a quick look at the ADR. So let's look at the news first. So we've had the news for the interest rate rise, 5%. So we did get the 5%. 4.75 was the forecast. There was loads of talk, has been loads of talk about getting a 5, mainly due to the CPI figures yesterday. Obviously, we lost the inflation figures yesterday. We didn't get what we wanted. So that puts more pressure on the Bank of England to increase interest rates to get on top of that. However, that causes massive pressure on the housing market, which isn't what they want to do, but that's what they've done. Nothing they can do. Got to get on top of this thing. It's not coming down. So this will come down in the next quarterly. So the next quarterly CPI will be negative because prices of energy are dropping. So CPI will be coming down. It's whether or not energy is enough to make enough movement on it for the Bank of England to be happy. So at the moment, we're sitting on 5. Terminal rate is now potentially 6%. Not likely, I don't think. 5.75 maybe. But 6% is going to be pushing it. But you never know. We might get there. So we'll see what happens. But in a normal world, we would be looking at a massive increase on the pound off the back of this because it's an unexpected rate rise, massively bullish currency, but we're not seeing it. So pound's reaction, excuse me, pound's reaction was a whipsaw, and we're sitting kind of where we are on the pound odd, pound CAD, whipsaw, bearish, pound Swiss, whipsaw, pound yen, whipsaw, pound New Zealand whipsaw, a little bit bullish, and pound US dollar bearish because we're having a bit of a rally at the moment on the US dollar. So nothing from the market, no real indication of bullish or bearish stance on it, which isn't massively surprising because the COT report shows that the futures market is positioned 52% long, 48% short on the pound. So the market doesn't have any real bias. It's neutral. So not quite sure what to read into that. I think we need to give it a couple of days to see which way they start to move. If they start to move bearish, I would probably say that's where we're going to carry on. But at the moment, no real indication of any directional bias at all. Unemployment figures came out on a 264 off a 261. So as expected, 3,000 on the unemployment claims is basically data error realms. So, you know, there's nothing on that. However, the US dollars had a little bit of a rally off the back of it. Indices didn't really bat an eyelid, but the US dollars had a little bit of a push. However, that was it. So market really hasn't reacted at all to any of this, which is surprising. So especially when it's an interest rate increase above expectation. Normally, you know, going back 6 months, a year, well, a year probably, you get something like that, you'll be having a 2-month rally on your hands. we're just not interested at the moment. So it's very difficult to read what is going to happen. So looking at the rates now, we're 5 on the pound. We're 5.5. Sorry, 4.5, obviously. So 0.5% increase. So that is the largest percentile increase we've got across the board at the moment. So that is the biggest move to try and get on top of inflation we're seeing across all currencies, which you would expect being on 8.7, having the highest inflation of all currencies. Our unemployment rate is holding, but teetering on the edge. So the only impact that's going to have is bad housing. So if we look at financial juice and what the sort of mumblings were, we've got 3 minutes to the open. Second round effects on domestic wages and price increases, blah, blah, blah. CPI expected to fall significantly this year, mostly due to energy, which is what I was just saying. So energy prices are coming down. Inflation will come down off of that. The question is, what percentage of overall CPI is energy? Is it a high percentage? If it is, then it's going to come down faster. If it's a low percentage, it will come down slower. So it doesn't really help us a lot. GDP doesn't really make any difference. There were 2 members of the board that decided they wanted to keep the rates the same. They got overruled by the other 7. So we've got 2 wanting a freeze in the rates, which is crazy, I think, at the moment. But overall, it's kind of fairly bullish on what they are planning to do moving forward. So we're not really getting anything from the market saying that that's what they feel at the moment. So I think we just have to wait and see what happens. So for the moment, business as usual on the pound, not really going anywhere. Sideways. We've been sideways for the last week. We're not really any better off. So all the smart money traders, all the smart money concept traders are short at the moment. I reckon we've got another leg because they're really smart. Right. So that's the pound. Indices got 2 minutes. Rest of the news this afternoon, we got Powell testifying at 3, half an hour after market open. He did that yesterday. There's nothing that I don't think is going to be said today that we didn't hear yesterday. Therefore, I don't think the market will hang about. So we should just get a normal open on the US indices. So we'll monitor those and see where we go. Big old move on the Dow pre-market. A little bit of a rally going on there. We've got 1 minute to go. So just a quick look at the Dow. Obviously, it's been coming down the same as the DAX. We've not really gone anywhere today, as you would expect. It has taken out yesterday's low and is holding. This low here and this low here is basically where we are sitting at support. So that is where we were previously acting as resistance. So this is a double bottom on this area, potentially, for a rally back up. We're on, what's this? 1, 2, 3, 4, 5 down days in a row. No rally. So market is due a little bit of a ease on that, a little bit of a profit take. So we could get a nice run this morning or this afternoon on the Dow. So we'll see where that goes. Upside targets is going to be yesterday's high. So it's all the way up the top there. So see where we go. So long on the Dow straight away. Buy stocks and sell stops in on the S&P. No trade taken on the NASDAQ. That range is too small. So going to wait for the 5-minute opening range. Well, that offset's way too big. Adjust that for next time. So we'll see where we go. No real directional bias or big movement at the off. Bit of a whipsaw at the minute. Afternoon, Brian, Burke, Peter, XR update.news. Morning, blew it. Slept through London, just catching up. Didn't miss much. Basically, they just whipsawed all the smart money concept traders and are now counting their cash. I'm just going to move these entries down just because they're double click on this mouse is killing me. Just going to move this down. I've got a mouse problem for those that weren't in the live room this morning. My mouse is doing that thing where it double clicks, which means the mouse button's on its way out. So every time I click on something, it goes click, click. It's like, no, I wanted to click once. Obviously, when you're trading, that can be a big problem. So when I go and click on the buy button and it enters 2 buys, keep your wits about you. May get hedged on the Dow. NASDAQ, undecisive. Let's just see what the max range is on the NASDAQ. $462. So we'll get a trade on the NASDAQ on the 5-minute opening range. Let's see where it goes. So far, pretty much is looking like the pound, isn't it? Absolutely no clue. Let's see what the US dollar's up to. So US dollar's having a little bit of a rally at the open, or trying to anyway. So that would indicate maybe shorts on the indices, but wait and see what happens. NASDAQ's going long. S&P not going anywhere. Dow wants to go short. Okay, short on the Dow as well. So I'm hedged on the Dow. Don't care which way it goes. One way or the other. Euro pound going to soar. Yen intervention. Don't know. So euro pound. Obviously, we had the Swiss franc rates this morning. As you can see, that was the Swiss franc rates. Just a whipsaw straight back to the beginning. Pound, obviously, I would say more bearish than bullish off the news, but really no clue. So I don't know. There's no indications either way on it. So the Swiss franc rate increase was expected, whipsawed. The pound rate increase was not expected, micro whipsaw. Just not interested, is it? Markets literally, it's almost as if they've priced it in, which is a distinct possibility. But when you look at the pound pairs, that's certainly not priced in, is it? This, they have not been rallying hard on the pound. This has not been priced in, this 5.5%. So it's difficult to tell. But euro pound, off the back of this morning, off the back of the news that we've had today, you would have to say that it's bearish fundamentally, but it's not showing any signs of that. So look at that whipsaw, straight into 2-week high, straight off. Support resistance. It's there for a reason. Pound US dollar. Had an ADR on that. Reverse alert's just about to kick in on that one. Why does it keep alerting me multiple times? Something's wrong somewhere with something. I don't know what it is. It's only just started happening. Right, Dow is a short. NASDAQ range is too big today, 500. So the reason that hasn't taken any trades on the pre-market was too tight. The open is too wide. So the a quarter of an ADR on this is 57. So I'm not interested in getting into any trades on something that's done a quarter of its average daily range in one candle at the open. It's too much movement happened for the market to really usually sustain a rally. Obviously, it can sustain a rally. It can do what it likes. But when you've had most of your range put in at the open, it means you're going to find it hard to get a strong, fast break to make money quickly. So something like that is a lot easier to get into than something that's absolutely huge. So we'll see where we go. But so far, the Dow is just whipsawed the open. The S&P is just not able to do anything. So long on the S&P at the moment, just about triggered a long on it somehow, obviously spread. Fred is big on the S&P. It's another reason. Japan intervention, no idea. So I would have anticipated this morning Ueda saying something. We didn't get anything this morning from the Bank of Japan. So there was nothing in the overnight news, the usual, we're watching it. But then when you look at what happened yesterday with the yen pairs, where's my lines gone? Why have my period separators disappeared? T4 is having a funny 5 minutes. Okay, fine. Weird. They just vanished for some reason. But yeah, when you look at what happened yesterday, wasn't a lot. So we didn't make a new high yesterday, basically. So we pulled back on the CAD yen. We did make a new high on the on a couple of pairs. So the US dollar yen, we pulled back. The pound yen, we pulled back. Euro yen, we pulled back. Yeah. So long and the short is the market, after getting those warnings, has pulled back a bit. If they don't keep pulling back, i.e. we get a rally today and weakness in the yen, then obviously something will happen with the Japanese. US dollar yen is pulling back fairly nicely as well. So I think at the moment it's kind of sit back. It seems that the Japanese are... I'm on the 1 minute chart, that's why. Sorry, I thought I was on the hourly chart. I was going to say, that doesn't look like the hourly chart. It didn't look like the price action I was looking at this morning. So yeah, pound yen basically pulled back yesterday. Euro yen was the one that did make the rally. Swiss yen held. CAD yen kind of pushed but held. So everything's sort of stopped on the yen, which is what they want. They don't want any continuation rallies. So if this continues to come down today, I think we'll probably see it quieten down a little bit until obviously they do the next rally. But oil, ADR. Stopped out on oil. So we haven't had the oil inventories yet either. They're coming out at 4 o'clock. So this morning, I didn't even notice that. I stopped out hours ago on it. So this morning, if you remember, we looked at this trade that I took on oil on Friday the week before, where we rallied. Target was there. And basically, I said this morning, I've got a stop moved up to there. Either going to hit that or hit that because we are struggling again. So what we looked at this morning was the consecutive lower highs, and that is exactly what it looks like they're putting in. So next stop potentially is for this new range contraction to carry on, and we'll be looking to target these lows. So out of that, didn't quite get the 6R. So that was about 4R on it, I think. $4R amount just over there. Difference between going for a 5.5R and a 4R, when you've been holding something for a week, it doesn't make any difference, does it? So unfortunate. So I'm just going to watch oil now and see where it goes. Potentially, you could take a double bottom bounce out of there. That might work. And obviously, there's this level here to watch if it comes down through there. But we've got the oil inventories today. We had some more news coming out about oil this morning. there. UBS, with demand seasonality rising over the coming months, we expect larger oil inventory declines to become visible and support oil prices. So the inventory declining is just basically demand eating up oil supply. As that declines, prices tend to rise. Yeah. So production cuts are obviously still happening, but they're likely to start to wane away from those basically as we move into the summer. As supply drops, they will start to increase production again. So I'm hedged on the S&P at the moment. Dow stopped out on the longs, so looking for the Dow to go short. NASDAQ's going out the highs. S&P hasn't got a clue. Nasty open. We might be waiting for Powell. You never know. So let's have a look at the FX pair. Afternoon, John. Michael. So ADRs. So we've got a few ADRs today. Oil, obviously, has just hit. There we go. Oil. So if you fancy a long on oil, again, speed of that movement, look at that. Who cares? Yeah. So it does this. This is why it's not, like gold, a very good thing to position trade with. Scalping or swing trading, fine, but I wouldn't want to position trade with it. So we are at ADR. We've got this nice support from 2 days ago within that propulsion gap to look at. So potentially a good looking long entry when you get the next reversal alert there. And if you like it long, obviously we're playing it up to the highs. So back up to those range highs. So there is the probability here that this is going to put in a new higher low. Yeah. So we are still bullish. Market structure still supports testing these highs. Yeah, so we've got a low, a high, higher low, higher high, higher low, higher high. If this is going to be the higher low, we're looking to come back up and test this area here. So this is exactly where you want to be buying it. So look for a 5-minute reversal alert if you're long biased on it, and try and get a rally. Obviously, if it comes down to this low there, which you can't see behind me on the 5-minute chart, we go to the 15. All right, let's go on the hourly. So if it comes down to this area here, obviously, you've got a double bottom bounce, and that's way beyond an ADR. So if we continue to push down to there by 4 o'clock within the next hour and a quarter, we've got the oil inventories coming out. So the oil inventories might be the catalyst to drive that all the way back up again. So we'll see what happens. So ADR on that. Euro Swiss is an ADR. This is a bit of a mess. So some of these you're not going to be able to really trade, or you can't really trade any of these today. So Euro Swiss was a double-ended ADR. So it had ADR both ends. ADR when it was 47. The news spike on the Swiss franc caused a move of 48 pips. So it just basically went up and down. ADR. There was no reversal alert. Euro pound, same thing. Whipsawed. Basically, ADR is 48. Whipsawed 70 pips. 150% of ADR whipsaw. Pound odd, same thing. Whipsaw. Pound CAD, whipsaw. So there's nothing really to look at on these. They're not tradable today. Pound yen, just whipsaws. So the pound has cleared liquidity at the highs with that move. Yeah. So they pushed up, pulled back, potentially clearing the decks for a short play. So there is a possibility that that might be what they're up to. Yeah. So anybody that's entered short today, you would have expected them to take that really, but obviously it doesn't work that way because they're not watching every individual pair for levels, but it's certainly a fake move to the upside, isn't it? So it does look bearish, which is obviously very surprising because of the bullishness of increasing your interest rates. We'll see. So shorts on the pound, which is good because I am. ADRs, RSIs, there's nothing on the hourly. So the hourly RSIs are here in this column. Nothing there at all. We're fairly sideways across the board. As you can see, pound yen is prime example. There's not a lot moving very aggressively at the moment this week. Aussie dollar, New Zealand dollar. Obviously, Aussie New Zealand is one that is, but that's the one I've just got out of. 4-hour RSI extension. We looked at this morning. if we are going to continue and this New Zealand dollar is going to stay bearish, we should see that move back to the upside on the Aussie dollar, New Zealand dollar. It's probably the only Aussie I would like to long. So there is a 4-hour RSI extension there. Yeah, but I'm not convinced. The Aussie, New Zealand, obviously at the moment, the bias is kind of bearish on it. So you might find it quite difficult to get out of, as you can see, any kind of trade that you get into it if it squeezes. The Aussie economy will always trump the New Zealand economy if there is reason for it to do so. At the moment, when you look at the fundamentals on both of these, we've gone up 0.25% to 4.1. Fantastic. We went up 0.25% to 5.5. You would think fantastic, but that collapsed and that rallied. There is nothing logical in the Aussie and the New Zealand's relationship at the moment. Both of them have terrible inflation, which is coming down at an okay rate, and they both have not too bad unemployment, which is holding stable. So they're kind of both should be bullish. But as we saw, the New Zealand dollar, the market had a complete opposite reaction to a positive interest rate rise. So I kind of leave it alone for the minute, unless there's a really, really nice extension, which happens really quick on the hourly, i.e. this is kind of what I would say, right, I need an 80 on it. It's got to have moved pretty fast and hard for me to get interested in doing anything on this thing at the moment. Days like this, where you're just getting huge moves and then you're just sitting around. This is just manipulation. There's no real bias or reason for this to go long or short at the moment. So kind of ignore it. NASDAQ's flying, is it? Yep. S&P's up, off to the upside. So decent move on the NAS. So the pre-market 15 opening range break was a double-ended whipsaw. I think we went long first, didn't we? Then short, now long again. So stopped out. So the 5-minute ORB on that was nice. Took the 5-minute opening range break. You are sitting not even 1.5 hour on it yet because of the range size. This is, I mean, to get this is the reason this version of the EA hasn't taken a trade today, because the size of that range means to get a 1.5 hour, you've got to get a massive movement. You need half an ADR of movement just to break even, and or get a slight profit basically on it. It's too big of a movement. Whereas the movement here is obviously much nicer. So we've had the opening range there be 37 or 3.7, which is a lot. 4 pips, basically 4 points, which is a lot more within the range that this can do. This can do 44. We've done 4. So, it's only done 10% of its average daily range. We've got loads and loads and loads of room available on that. Obviously taking that break and not taking that one because it's done way more of its range at the open. Same as the Dow. Opening range on the Dow, absolutely vast. What was a news event coming in? Wasn't. Bowman is speaking. Rooting out inflation isn't easy, needs hard decisions. Yes, blah, blah, blah. Defend it. Right. So that's the Aussie New Zealand. CAD yen. So at the moment, CAD yen is just obviously stable up at the highs. That is extended on the 4 hour. We've been extended on the 4 hour on this thing multiple times. We are just embedded. We just keep touching the 50 and staying there. Yeah. The yen, as we know, is massively weak, which is why the Japanese are going to intervene at some point if this carries on going. So we are just playing the waiting game at the moment with the yen. It's been extended away from this 24 moving average for such a long time. When it comes down, it's going to be fast and it's going to be hard. Always is with the yen. Every time it comes down after climbing up those stairs, it tends to be a very fast and hard correction. So we're waiting for the fast and hard correction. If we're looking at kind of equidistant moves, you're going to be back down in the 24.72 zone, usually within 2 to 3 days. That's just what the yen does. So, however, at the moment, it's rallying very hard. So looking at the US dollar yen, we are now kind of back up at this 142 level, this support resistance area where the Japanese initially said, stop. The market did. We retested it. They went, stop. The market did. We break that level. That's when we're going to get that, boom, one of those, or those. Yeah, it's suddenly just going to drop 300 ADR. So CAD yen extended, Swiss yen also extended on the 4-hour. We just got back up there. So we were extended here. All we got was that little drop, and then we had this massive, massive rally. So this is an hourly RSI extension that was taken on this one. So in 3 positions, just waiting again. So the nice thing today is the market hasn't actually managed to make any progress so far today. So we are holding. Even the Swiss franc with the interest rate rise still hasn't made any progress. So we are holding up at the highs. Just looking basically for that correction to come in at some point. Euro odd, that's also extended on the 4-hour. Again, euro likely to be bullish. We've got 2 more interest rate rises promised, but again, that doesn't really mean anything at the moment, does it? So the thing is now, obviously, the Australian dollar seems to have stopped its rally. That's going to give the euro a little bit of time to correct, which it's obviously been doing this week. So I reckon probably pull back, and then we'll start a move to the upside. I don't think that Australian dollar is really going to rally much from where it's been. We've had the interest rate rally. They have come out and said that they are watching inflation, and there is a good chance that they will pause interest rates again. So with the Australian rates, I'm never going to be able to find the Australian rates here. Which day was it? CPI, can't remember which day it was. I've gone past it, haven't I? Well, that was unemployment. I was just trying to find the rates. But the Aussies seem to be playing this game of 1 month on, 1 month off, 1 month on, 1 month off. The off months, the market doesn't like the off months. They're struggling. Yeah, they've got the second highest inflation everywhere at the moment, and they keep mucking about pausing rates. That's not what the market wants to hear. So if they're going to continue to do that, and that is what they've said, the market is more likely to rally down in expectation of them keeping that 4.1% on the next rate hike. So we've coupled that with the fact that Lagarde has said we will be increasing interest rates again. You should expect euro odd to be along. So where we're positioned at the moment is great. It's a 4-hour RSI extension. We should be looking for some movement like that. So it's valid for taking a short, because obviously we would expect to pull back before the next leg up, but much better to take a long if possible. As you can see, took the longs here expecting it, and then obviously the Australian dollar had that massive rally. So euro odd, euro Swiss franc, not a clue. 1.75, not batted an eyelid. So who knows what's going to happen with the Swiss franc? Because this is the euro against the Swiss, these two move together. This is like the Aussie New Zealand. You'll get these big, strong squeezes where one has an interest rate change or something fundamental shifts to make it move really, really fast, while the other one just sits there and does absolutely nothing. However, it's the Swiss franc, so it's constantly moving up and down as money's pouring in and out of it. So it doesn't really matter which way you take a trade on this one. Most of the time, you'll be able to get out of it fairly easily. So it isn't extended at the moment. That was the last trade that we had on that one there. Haven't had anything else on the hourly, really. There was an entry there, didn't get onto it because the reversal alert happened pretty much the same time. It's a V-shaped recovery. It all happened too fast. So that's the only entry I've had hourly on it. 4 hourly, it's extended above the 70 level. Possibly coming back up into this monthly area here. but could you go from there? So up to you if you want to get into this. The 4 hour, looking at what's happened over the last month, the 4 hour RSI extensions above 70 are happening far too frequently and far too easily at the moment. The market is it's having lots of days where it's moving constantly like that. So intraday, you're getting lots of hourly swings inside, which is absolutely fine. But the 4 hours are struggling because what we're doing is we're just getting flags appearing on the 4 hour. So it's almost, and this is, I'm potentially thinking of doing this. I'm not actually trading the 4 hour strategy at the moment. I'm trading the hourly. So if you are trading the 4 hourly, there's an argument at the moment for looking at the 80-20 level over the 70-30, because the 70-30, as you can see, is being achieved a lot because the movements tend to be very strong and then quiet, then very strong and then quiet, very strong, quiet. We're not getting those swings happening as much. They are happening intraday, but on the 4 hour chart, you don't see them because all you're seeing is large volatility candles. So the 80-20 is on a lot of these instruments at the moment, the much better entry method. You're going to get a lot less entries, but a lot safer at the minute. So this is what we're seeing a lot of. We're seeing a lot of extensions on this 4 hour RSI sitting here. They're not getting over here much. They used to, they don't anymore at the moment. This condition in the market is not as volatile as it has been with moves on the 4 hour RSIs. So these are much better, obviously, entries to take because we know that we're much more extended. And when we get extended above the 80 level and the market's been rallying, it's very hard for it to sustain any more movement, and you get in and out a lot better. But at the moment, anything that's hitting these 70-30 levels, you've got to be a little careful with because they're just not getting the pullbacks that you're used to on them. So Euro Swiss is extended. Again, there's no directional bias on this at all, the Euro Swiss. Very difficult to pick a direction on it. Market structure at the moment is long, but equally, as soon as you run into that high, it could flip the other way. So tricky one to trade. Euro yen is extended. We know that it's a yen. Everything is extended on the yen. Did start to look like it was coming down. So we have had a spinning top put in. So that is a pause candle. So at the moment, we've got 3 hours left on this candle. So if we close bearish here, that's not a very good candle, is it? We close bearish there. That's a 3-bar reversal. Push, pause, pull. So that is basically the bulls running out of steam, bears taking over. We are very, very extended. All these yens, they are so extended and we're literally just getting flags on them. This is why the Bank of Japan is so concerned and why we're seeing all this news coming out of the Bank of Japan saying we're watching what's going on because they can't let this continue. So they will just suddenly hit that accelerator pedal and this thing will come down fast. But we need a catalyst. And the thing that's letting us down at the moment is US dollar yen. Everything else seems to be able to get above it. The US dollar, though, has no strength. And if this thing gets higher, we're going to struggle to get some yen intervention. So tricky, euro yen. Again, no reason why the euro should be so bullish against the yen, but it is. So that's where we are distance-wise. What happened last time? Again, just waiting. So it comes down as fast as it goes up, always does when you get this extended. But there is obviously the opportunity for a flag break. With moving averages, when you're looking at moving average pullbacks, when you're looking at trend trading like this, pullbacks to the 24.72 zone are where we tend to start new legs. One of two things happens. Either the market goes into a range or a flag and waits for the 24.72 to catch up, and then it just rallies from there. Or we get the opposite where, in this case, it pulls back to the moving average and then rallies from it. So obviously that's what we're looking for. We're looking for a profit take move so that we can get out of the positions. Where you get stuck is where you get these sort of accumulations. Can't really see one. Yeah. So you get these rallies and then we just sit sideways waiting for the moving average to catch up, and then it pushes back up again from there. So one of those two things. It can't get much further than we are because it's literally going to run out of steam. There's no one going to want to set it up. But the market at the moment is still massively, massively short on this. So when you look at the retail positioning, they are massively short on it. Ready? Yeah. CAD yen, odd yen, Swiss yen, euro yen, pound yen, New Zealand yen. 82 to 92% of the market is short. All liquidity is sitting at the highs. That's where the market's going to want to go. So at the minute, still rallying. We're just waiting for them to stop or for the Japanese to step in. Euro US dollar, that's just starting to roll over at the highs. Not a very good support resistance area. That double top there is beautiful. It's kind of a triple top zone there. So anywhere up there, it's hit it 4 times, look. 5 maybe, if you want to count that. So we pushed up, rejected, 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 pushed up, rejected. Yeah, massively strong zone. We're close. It's only an ADR away. So between 100 and 175 ADR, you are likely to find a bucket load of sell orders sitting up there. So this is obviously still market structure long, potentially for a rally out the highs. By the time it gets up to there, though, it will have been rallying for 3 weeks. So it's going to want to have a rest. So we've just basically rallied, accumulated, rallied, flagged, rallied. By the time we get there, that's 3 legs up. This thing's going to want to break. But we're going to need some US dollar strength. And the way the Fed's going at the moment, they're just not talking it up enough. And before that, potentially in the next week or so, we've got the euro rates. Sorry, what's that? Wrong week I was on. Oh, it's Euro CPI, sorry. Next, I knew there was something coming out next week. It's the Euro CPI next week. So it's the inflation figures for the Euro next week. We've got Lagarde speaking as well. We've got everybody speaking. Oh, Ada's speaking. Oh, where's this lot? Next Wednesday. Everybody's talking next Wednesday. That might be an interesting day. So yeah, we got some news coming up on the Euro. May rally, may not. But it's going to be an interesting couple of weeks, I think, for the Euro, and we're going to see some movement in it, definitely. But at the moment, no matter how much Lagarde talks it up, the market doesn't seem to want to rally on it. So everything is stuck at the minute, which is annoying. But anyway, so if everything's going to get stuck, hopefully we get a lot of that. Sure. So that's Euro US dollar. Again, that's a potential good short. And Aussie and US dollar CAD. Been long on that for a couple of weeks. It is starting to rally, but we're stuck on that last week's high. Last week's low, which we've just reacted off. So we'll see. But this thing again, huge move off of the rates. Market just collapsing. So it seems that every time we get an interest rate rise or decline at the moment, it doesn't matter what it is. The market just moves massively off the back of it, and it doesn't care which direction it goes in at the moment. There's no logic to anything. Canadian dollar obviously has been rallying off the back of oil. Oil is potentially looking like it might come down, which is going to give the US dollar a bit of an advantage over the CAD, and we should be able to see a rise as long as we don't get Powell talking the US dollar down. So if we start talking again about this debt ceiling and defaulting, that's going to be bearish US. It's just going to continue on its merry way. But the profit take moves on this are all flags again. There aren't any, basically. So we've just literally had a rally, decline. That's the first flag we've had. First signs of any sign of strength in the US dollar. So everything's squeezy McSqueezy at the minute, still. But slowing, which is good. Dow is actually trying to get out that high. So NASDAQ just pulling off the top. Long on the S&P. DAX just trying to get back up to that gap fill still. So market looks bullish again across the board, which is good. Afternoon, Tammy. Anybody got any other pairs they want to have a look at the moment? There's nothing much else to look at really. At the minute, very erratic everything at the moment. US home sales have just come out as well. 4.3. Lots of people owning houses. Mortgage rates are going up. Might not be soon. We got talk in the UK. I think I said this morning of basically them extending our mortgage periods until we're kind of like 80 years old. Can you imagine having a mortgage and still having to pay a mortgage when you're 80? You've retired for 15 to 20 years and you've still got to pay your mortgage. That's the world we're living in. I said to the wife, it's not likely that the kids are going to inherit the house from us. They're probably going to inherit the mortgage, the way it's going at the minute. These rates continue to go up to the rates we had back in the 70s and stuff. 15% we were looking at. We're currently sitting on 5%. Still a long way to go if this is going to be the recession of all recessions, isn't it? Game of nerves if NASDAQ will make 2R on the 5 minute. So your 5 minute ORB is there. 1.5 hours paid out. That's the target. At yesterday's level. I would say you'll probably get there after the strength this has rallied, but it might just pull back into propulsion, pull back into that high. Get another leg up. We just had a down, lower high and lower low on the S&P. We're putting in a higher high and a higher low though now. Doesn't really tell you a lot. Yeah, we'll see. So opening range on the NASDAQ was 496. 462 was the maximum, which is 0.2 of an ADR. So I'm looking for 20%. The market can't put in more than 20% of its daily movement in one candle. If it does, I'm not interested. So basically just trying to reduce the moves. However, obviously today, that would have been a beauty. Well, I say it would have been a beauty. It's not really a beauty, is it? Look. Got 1.5 hour, but you had to wait 25 minutes to get 1.5 hour. So it made it, but that's what I mean. It's a lot harder to get that risk reward. The opening range breakout strategy is a case of getting those nice big wins. When you've done 20% of your average daily range in 5 minutes, it makes it a lot harder for the market to get a decent move because it's done so much volume there. That's what the testing shows anyway. So I'm just interested to see how it plays out because we've had 2 days now where we've had big open ranges, and we've managed to get a decent move, decent opening range break. But the opening range break isn't the best reward in the world, is it? Much better to have a range where you can get that reward quick, be done, like the DAX this morning. DAX is stuck as well at the highs. Goes up, I meant. Yeah. Yes, I mean, it'll... 2R basically is that yesterday's level. Yesterday's low. Sorry, that's previous day's low. Not yesterday. That low there. Previous day's low where we reacted yesterday. So somewhere around there potentially is going to be your resistance level if we're not going to make new highs. Don't forget the DAX has got 3 gap fills to do to the upside as well. I think it's bullish today, but wait and see. Always difficult and dangerous trying to decide on a direction. Oh, look at that whipsaw on the DAX, look, on the Dow. So went long, stopped out, obviously went short, stopped out. Even so, that movement there is a quarter of an ADR whipsaw. Absolutely nothing to do with that one. Huge whipsaw this morning. So the S&P obviously is a nice long at the moment as well. So we're just coming up to that high. Platform's frozen. There we go. So S&P is the only thing that's going to keep us alive today. Right. Look out on GU, M5 and M15. What's going on in GU? So reverse alert just gone in on the 5-minute chart off of ADR. So there's your ADR reversal. So hit ADR, W pattern reversal, which would require the US dollar to drop. So you've got to be, when you're looking at ADR reversals, as I said, when we were looking at the ADR reversals, if you've had a news event which has been big and spiky, I mean, you can take it obviously, but it's kind of a 50-50 flip, isn't it, really? This isn't reacting off of ADR. This is reacting off of a whipsaw. So not really an ADR reversal, that one, but technically it is. But fundamentally, we've had that. Basically, it's put in an ADR. ADR on this is 102. We put in 950, 95, basically, on the news. But it is a long. Although I'm not convinced on the pound. Don't know. Very difficult. What's everybody's thoughts? I mean, I can't really. At the moment, I'm struggling to gauge the market reaction. You can look at everything fundamentally and look at how things normally react. And this is kind of what I was alluding to this morning when we were talking about strategies and the fact that strategies stop working because the market conditions change. At the moment, fundamentally, for the last decade, when you get a positive interest rate rise, you get a positive movement on a currency. When you get a positive CPI number, you get a positive movement on a currency. Today, we've had a bigger than expected move on CPI. We've had a bigger than expected interest rate rise on the pound. The pound is coming down. Yeah, this is not the norm. This is what the world we're living in post-pandemic is not being affected in the same way as we used to. The market doesn't have the same drivers or faith, I think, in where it should be positioning itself based on what typically we would expect to see currencies do. Stuff changes, so you have to change. You have to adapt to it. And, every being in my body at the moment says you need to be long in the pound. But I can't long a unexpected interest rate rise that has a negative impact. Just doesn't make sense. The news says one thing, fundamentals say that, market is doing that. Why? The market certainly hasn't factored in the interest rate rise, and it didn't know what the CPI figures were going to be. Therefore, you should expect it, shouldn't you? But it's not happening. So something is amiss. Something's out of whack at the moment with a lot. Same with the New Zealand dollar, same with the euro. We've seen now 3 currencies drop on a positive interest rate rise, with further interest rate rise increases promised by the central banks. Doesn't get any more bullish than that. We didn't used to anyway. Things are changing, which doesn't affect us massively because we don't really use a bias as such in position trading. You're getting in on market movement. So I don't care whether they go long or short. It doesn't impact me whatsoever. What I care about is that when they do move long or short, they take profit on the moves that they put in. As long as they do that, they can go south, north, or just stay in a range. I couldn't care less. It doesn't make any difference to me whatsoever. as long as they carry on with market structure, which they are. But, it doesn't help you when you're thinking, that looks like a great buy. At the moment, my brain is saying, does it? Yeah, we just had a beautiful support bounce. If I was in that long now, after getting that news today, I'd be thinking very hard about getting out. Because if I was long on that and I heard that news, I'd be rubbing my hands together going, this is payday. It's not paying, is it? I know the news doesn't react to colors, but that's green for a reason. That's green for a reason. Typically, in the old world, your CPI figures are up, you're going north, because it should affect that. And we've had that, and it's done exactly what that said that should do, which means that should carry on. The Bank of England have come out and said we've got 0.75 to 1% further to go. It's as bullish as it gets. Pound didn't get the memo. So something's not right, is it? I just get the feeling maybe the market's scared to death of a crash. And, when you look at the S&P, I keep talking about going back into a bull calm regime, which is what we're used to. It looks like it's starting to do it, doesn't it? But I'm not sure the market's actually got that much confidence. We've broken highs, which is great. So when we get to there and there, there's a possibility, I think, of doing that, because by the time we get there, there's a good chance that the housing market will be coming down. Banks start losing money in those circumstances. So tricky, very tricky. So low time frames, you don't care, do you? If you're an investor, I'd be very concerned at the moment about what the hell to do. Pension fund. Where do you put your money in the pension fund at the moment? Do you put it into energy? Do you put it into the stock market? Don't put it into Bitcoin, obviously. Look at Bitcoin. We haven't looked at that for ages, have we? Look, well, something's woken it up. What's that? Was that to do with that SEC thing and Coinbase? That's a big move. Good. Right. Anyway, I don't trade that. So NASDAQ stalling out at yesterday's previous day's high. S&P doing the same, obviously. Dow also looking like it wants to stall out. DAX has made new highs on our way to the gap fill. So if you're still in the gap fill play from this morning, you've got a quarter of an ADR to go until the gap fill's complete. Then when that gap fill's complete, if you are thinking about holding longer for the previous gap fills, target 2 is up there. Target 1 was there. So that propulsion gap, that gap fill there, that gap fill there. And obviously, we're just completing this one now. So again, 80% fill first, same day. Not actually true. 78. But they fill, a lot of them fill very quickly. So so that one filled same day. So we're just looking for basically gap fills. So if this is going to be peak formation low, which is what we talked about this morning, all the way up there, I think it was an 11R, was it? Something like that. Big reward, that one. If you can hold it. I'm not holding. Certainly not holding that long. Right, I'll leave it there. Anything you need, let me know. I'll be in the Telegram group. As usual. Back tomorrow, 7:50, same time. And we'll basically have a look at these pound pairs and see where they've gone today. So just looking for a reaction, really, on the pound to see if the market starts any movement. At the moment, it's not got any legs, is it? That's a total confusion at the moment. The market really not impressed with the rate increase or the CPI figures. So as you can see, the last 3 days, totally sideways against the US dollar. So we'll see where that goes. We'll have a look at it again tomorrow morning, but it looks like, to me, we want to be looking short on it now. Amy, which trading stop do you use for the indices? I don't really use a trailing stop. So on the original ORB, there's various trailing stops. There's lots of different variations of the trailing stop on the ORB, but I don't really use it. If I'm using the scalping setting, which is the pre-market 5 with 1.5 R, the trading stop on that is tight because you want to be hitting target and then trading it very quickly. Just got some news coming in from Powell. There you go. So this is kind of what I was just saying. The FOMC broadly feels it's suitable to raise rates again this year, perhaps 2 more times. Bullish. Yet the market does not react to this when we hear it. Normally you get, the old joke, isn't it? In trading, you get Trump coming out and doing a tweet and all of a sudden the market goes mental. Powell printing money, making the market fly. It's not happening anymore. The market's not reacting to news in the way that we are used to. That should be a massive bull move on the US dollar. Just bizarre, very bizarre to see it. But yeah, so I use I would use it. It's entirely up to you. All I would say is back test. Yeah. So the testing that I've just done with the new version of the EA that I've built to gather data, the back testing shows that not using a trailing stop is more profitable. Yeah. Reason being is on the runners where you get the 5R, the 7R plus, you don't get stopped out. If you use a trailing stop, you'll get stopped out. That's what a trailing stop does. You are telling the market to get you out in a pullback. In a trend, you have a pullback, multiple pullbacks. So what you're saying is, get me out the first time you pull back before you carry on in the way you're going. However, when you get a whipsaw, the trailing stop reduces your loss. There is no right or wrong. You just have to test. All the back testing that I did with the initial opening range breakout that's on the blog post linked from here, you can see what is being used in the back test results from that. There's varying results there, and they all are roughly about the same. Some use stops, some use tight stops, some use wide stops, some don't use stops. At the end of the day, the ORB is a breakout strategy. You make money when it breaks out. When it doesn't break out, you don't make money. So how you limit your losses is down to you. The new version that I've built for testing has shown that actually using an ADR-based stop, which is wider, a quarter of an ADR or so, and letting the market just close the positions before the close is actually more profitable. So, which you can do with the original ORB as well. So you would use kind of like 150% stop or something like that. But all the back testing is showing, very small drawdown by using a 0.25 to 0.3 ADR based stop. So what we're doing is we're saying, get that range. Instead of taking the stop on the opposite side, put your stop a quarter of an ADR away. Yeah, so something like that. Because we know that the market can move 1 ADR a day, and often it will do, moving 1 ADR a day. So if we give the open a quarter of an ADR of breathing room, you will get hedged, but when it goes, you will get stopped out on one and continue on the other to make profit. So it makes profit more regularly by giving itself breathing room. Whereas the original ORB testing and strategy that I did was a scalp. This is more of a let it play out for the day type thing, which you can obviously set up with the existing opening range breakout EA. All you do is you set a wide stop loss on it. So instead of using in the set files, all the stops are based on 110% there. Percent of opening range to use 110%. If you wanted to simulate using a quarter of an ADR, you would use something around about 150, maybe 180% of the average of the opening range. So basically you will get hedged sometimes. So it either goes, happy days, or it whipsaws, gets you in both directions, and when it makes its mind up, it makes money. Or it whipsaws like that, and you end up closing it at end of day without it having made enough movement, and you just take whatever small loss you've got there. So the equity curve is nicer. But also it can stagnate a lot when you're in rotation days. But that's no different to the normal ORB, is it? We know that. It's a breakout strategy. The market spends 80% of its time in mean reversion. Breakout strategies work 20 to 30% of the time. That's to be expected. But I'm just trying to get a version, if you like, that is more tradable, like this S&P one. Yeah. So we've gone short, we've gone long. Yeah. Look at where the stop loss was on that short. It was there. Yeah. Now we're in profit on the long. Yeah. So if this now does that today at 10 o'clock or 9 o'clock tonight, it will close it wherever it is. If it's done 150% of ADR, I will close it at 150% of ADR. If it comes all the way back down to here and it's sitting here, I will close it there. I will make that much, which is going to basically be a break even, isn't it? But it's just giving the market time to put its candle in. We're trying to benefit from those big daily candles. Candles that look like that, we're never going to make any money on. Rotation. Can't make money on rotation. But those days, we're going to maximize the wins. But we're going to give it room to breathe at the open by using wider stops. That's what it's telling, the back testing is telling me. And as Brian's just said, no hedge for me. I just get kicked out. So set up 2 accounts, Brian, with 2 different brokers. Set your ORB EA up exactly the same on both of them. But one of them tell it to go long, the other one tell it to go short only. So in here, you just go into your common and switch one to go only long, one to go only short. You're going to get exactly the same effect. That's all you can do in the US if you've got hedging rules, no hedging rules. Use 2 accounts, one long, one short. Same thing. The stops are going to be in the same place. The trades are going to be in the same place. Everything's going to work exactly the same, except it's just not going to be on one chart. So if you had 2 S&Ps running now, the one that you'd gone short on is stopped out and flat. The one that you've gone long on is sitting there in profit. On the Dow, you've stopped out on both because it had, again, a wide whipsaw. But this is about as bad as it gets, whipsaw-wise. I mean, look at this. It's just nasty today, wasn't it? The Dow. You get days like that. Part of the course. Just sucks having 2 brokers. Yeah, it's a pain in the arse, but what can you do? But if you stick him on a VPS, just let them run. We can do. Quite a few people do that with quite a few EAs. People have said with the market reversal alerts EA, they've been trying to run the hedging set file, and that's the solution. That really is the only solution, unfortunately. But, and the other thing that is becoming clear from this testing is that a 2R initial return is better than a 1R, 1.5R. The 1.5R gets hit faster. You have more profitable days, but overall profitability on the equity curve is smoother using a 2R. However, the return on drawdown is lower. It's happy. This is the thing. This is the happy version of the opening range breakout strategy. This is a kind of a 2 to 3 return on drawdown, but the equity curve is happy. The other one is like your Lamborghini with no traction control. Yeah, it's returning 4R to 5R, but it's like that. Your P&L is horrible. It's all over the place. You're making loads of money on those big days, but you're going through horrible stagnation periods where it goes like that for a few weeks, and it's nasty. And they're all profitable. There's 1,200 runs of the strategy here. Look. 1,130 of them are profitable. So out of 1,200 system parameter permutations, only 70 don't make money. Every single one of them makes money. I just want it to make money nicer so that I don't have to pull my hair out every day when it goes mental. That's what I'm after. Too old to have all the excitement now. I just want to make money easily. Awanda has it where I can take one trade on MT4 and the other on TradingView. Set up as 2 accounts. Both have separate funding. At the end of the day, I can combine funds in a master account. Yeah, that's good. Brokers will bend over backwards. You were here this morning, weren't you, when I was explaining about brokers and how they work. Brokers will bend over backwards to facilitate you pressing the button. All they're interested in. Every button press is X cents profit. If you can press the button in both directions using 2 accounts, that's double X cents profit. Thank you very much. What they're after. Button press. How they make the money. Right, S&P running nicely. NASDAQ running nicely. If you're on the NASDAQ ORB today, well done. Fantastic. I'm not running at the moment. I blew a prop yesterday. No, I didn't. I blew an evaluation yesterday, and the funded account is sitting waiting for withdrawal. So I'm not actually trading today. On ORBs, I need to set up another evaluation actually. So I might do that this afternoon. I'm going to get paid. Right. I'll be back tomorrow, as I said earlier, before I didn't go. So anything you need, Telegram, tomorrow 7:50 for the New York session, for the London session rather, 2:20 for the New York session as usual. Yeah, we will discuss this pound and figure out where the hell this thing is likely to go next. And see if we can figure it out. All right, so have a good one. Anybody needs anything, come in Telegram. Otherwise, I will see you guys tomorrow. Have a good day.